Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is a special edition of Market Today where our focus is on the Q3 earnings. And Tamilnad Mercantile Bank has in fact reported its Q3 numbers with a net profit jumping about 37.86% to 279.7 crore rupees. The NII has also increased on an 18% on a year-on-year basis to over 534 crore rupees. The net interest margins have stood at 4.5% in Q3 FY23 as against 4.03% in the same quarter last year. Now, to discuss more details on the fine print of the earnings and the outlook going forward, joining in is the top management of the bank. Mr. S. Krishnan joins in. Thank you so much, sir, for taking the time out. He's the MD and CEO of the bank. Welcome, sir, to Business Today TV. I wanted to begin by understanding more about the details into the fine print of the earnings. What has led to this performance, the strong move on the upside as far as the net profit is concerned, and going forward, do you hope to sustain this kind of a move on the upside as far as the profitability is concerned?
Thank you very much. In fact, it's a great pleasure for me to share the results of Q3 of the bank, which was adopted earlier in today's board meeting. And if you look into every parameter, in each of the parameters, the bank has excelled extremely well. Particularly, I will touch upon the parameters which are of more importance and people are more interested to know in a banking industry. For that matter, any industry, a stakeholder, a shareholder will be interested to see how his value is enhanced quarter after the quarter by the performance of the company. So when I look into those parameters, be it the net worth, be it the book value of the share, be it the earnings per share, the return on assets is true. The ROE, return on equity, the capital adequacy ratio, all are extremely good. And the other parameters, when for a particularly for a banking industry, one will look into the asset quality. What is the NPA ratio? Whether it will be the gross NPA or the net NPA. Gross NPA, we could contain the slippages and we could maintain the NPA ratio at 1.7, which is below 2, much below 2, one of the good number. And the net NPA we have brought down to 0.75. Consequently, the provision coverage ratio has gone to around 90%. The other important parameter, as you are observing your opening remark, is about the NIM. NIM is one of the good at 4.5. That is one of the best in the industry, I can say, where we can have the NIM at 4.5. The overall how it has and how I will be going forward. Question what you asked is that the overall I could achieve this because one, my focus on the business. When I say the business, the banking industry mostly is on the asset side, that is the lending. If you look into the lending mix, I have a RAM segment of 89% and only 11% are out of the corporate. My growth on the advances, if you look into for the whole year, year on year for the period under December, I have grown around 8 or 9%. But within that, if you look into the RAM segment, what I said, in the retail, I have grown by about 16%, agriculture around 13%, and the MSME around 7%. And the overall growth is around 11% in the RAM segment. The advantage of the RAM segment is there is no concentration risk. And this has resulted in maintaining my asset quality, the gross NPA at 1.7. If I look into the slippage ratio is just 0.19, which is again one of the good in the industry. Going forward, what I can say is that I will be able to maintain this type of asset quality. My gross NPA will continue to be below 2, net NPA will continue to be below 1, and the provision coverage ratio will be around 90%. The NIM 4.5 may be a challenge. In fact, last quarter, when I came out with the results, when I met you, I said the same thing that maintaining this NIM is difficult, but we are always taking the challenge as an opportunity. We take it and we could improve it rather slightly than the last quarter NIM. But maintaining NIM of 4.5, again, I say that is a challenge. My guidance to the street will be that my NIM will be above 4.
Okay, understood that. Also, when we talk about the deposit and the loan growth trends, what have you spotted this time around and what could be the guidance going forward?
Yeah, if you look into the deposit growth per se, if one looks in isolation of the breakup, may see that the deposit growth is just 3.34%. But I will say that my growth within the deposit, if you look into the CASA, which is a low cost deposit, my within the CASA also, my savings has grown by 9%, which is a low cost, and my CA, that is the current account, which is a no cost deposit, that has grown by about 12%. And overall, my CASA has grown by 10%. This has ultimately resulted in saving the cost for me. In spite of the increasing deposit rates in the market, my cost of deposit, if you look into, I am able to maintain the same. Going forward, I expect that my overall deposit growth should be around for this year, maybe little less of 10%, but on long term, I can say that the deposit growth will be around 10 to 12%.
Okay, and could you also be exploring any other levers to bring down your further cost to income lower?
Absolutely, absolutely. In fact, we are embarking upon a lot of digital initiatives. And these are in the pipeline at various stages. Some of them will get matured and will be rolled out before the end of the fiscal. Some may be spilled over to the next fiscal. But when I say these will definitely go a long way in reducing the cost of the bank. For example, very shortly, I will be introducing a tab banking by which I will be able to acquire new customers. The cost of acquisition of a customer in a branch is much, much higher, in a brick and mortar branch, and I will be saving a lot.
Sure.
This I will be rolling out very shortly. All the tests are completed just before we connected. I got the clearance from the IS audit also, so I will be rolling it very shortly. These initiatives, digital initiatives, on the one hand will bring down my cost. On the other hand, with the customer's delight, I'll be able to have more customer base.
Okay, understood that. Apart from this, if you could give us a sense of what is the outlook on the credit offtake and which are the segments that you believe can actually look for more credit in this coming year?
See, the credit offtake, if I have to talk for my bank, I will say that my growth will be ranging around 10 to 12% for the year, which I will be able to achieve. And as I said, basically, we concentrate more on the RAM segment. When I say on the RAM segment, even today the demand has picked up, be it the retail or agriculture or the MSME, but the MSME is one where still much more demands have to come. They are picking up after the COVID and other things. They have started picking up.
Yeah.
The great advantage and strength of the bank is the MSME, where the bank understands the nuances of the MSME and the MSME unit understands the bank fully. That is how we are wedded, and we have excellent relationship and the business in MSME.
Okay, understood that as well. Yeah, please continue.
So that is the area where I will be going on the RAM segment, but I will be selective on the corporate. It is not that I am closing down the corporate. I will be selective on the corporate as and when the capacities increases and the demands are there. Definitely for the good corporates, I will be picking up.
Sure. Also on the expansion plans going forward, if you could detail for us, are you looking for any more branch expansions in the coming financial year? What is the outlook on that? You're already present in about 16 states and 4 union territories. Going forward, are there going to be any increase in the number of states and, looking at a pan-India presence?
Yeah. In fact, before the end of the fiscal, I plan to open at least 25 more branches across the country. Very shortly, I'll be having the first footprint of my bank in the northeastern state. So we will be growing pan-India. There are plans of opening the branches at different parts of the country. I will be opening at least about 25 branches before end of the fiscal. And next year, definitely, we will have much more roadmap, which I will be taking it to the board, and then I will come to you in the due course of time. Apart from that, we also plan to have digital banking unit. The work is going on towards that. Ultimately, that the aim is that we have to make this as the most preferred digital bank.
Okay, well, all the best for that. And thank you so much for speaking to us and sharing with us all the fine print of the earnings. Here's wishing you all the very best for the coming quarters and hoping to get more interactions going to understand more about your business outlook going forward. Many thanks.
Thank you. Thanks a lot.
If you like the video, do like, comment, share and subscribe.